All right, what's going on, YouTube? Jay Athens back again with another video. And today's topic, we're going to talk about how to progressively get better in the markets. And I think with my 11 years experience, I can drop a topic on this video, right? That's what I think. Hold on. So I think I could drop a topic on this video on how to get better in the markets. And I know there's a lot of new traders in the market. They're coming in and they probably have about 6 months to a year, maybe a year and a half experience. And keep in mind, let me drop this disclaimer. This is all coming from my perspective. So once again, I don't want anybody crying in the comments, giving their opinion. Oh, that's not the way it goes. And listen, like I said, I've been doing this for a little bit over 11 years. I think I have enough experience to even have this conversation with you guys on YouTube. So let me do my thing. Now, a lot of people are coming in 6.5, or not the 6.5 months, 6 months, 1 year, and they seem to have, it just seems like everybody has the same perspective in the markets. And they come in, and I always ask people all the time, what's your approach? How long you've been trading? And most people tell me, you know, I've been doing it 6 months, and my approach is a technical approach. And I tell people all the time, well, that's the first mistake, because in your years, as you will come to discover that doing it from a technical approach is backwards. So a little bit about my background from when I started. I started around, well, I started looking into equities around 2009, 2010, things of that nature. And I was into more stocks, more long term. And people, some of you might know this story again, but for those of you on YouTube or just follow me or just subscribe, you need to hear this information, because some of you might be on this path and you could find some value in what I'm telling you in your path to kind of help you on your journey. So I started back then, and I was into stocks, and I think all traders go through this same thing. I don't know. I think the story just seems the same, but I have no reason to bullshit you guys. I was online. I saw where an opportunity said that I can put down $10 and make $17. So I'm not going to make this video too long. $10 and make $17. So once I saw that, I thought, you know, I hit the pot of gold. This is it. I don't have to work anymore. I'm going to make money doing it this way. Come to find out, it was binary options. So in the beginning of my days, I traded binary options, and the broker that I had was Boss Capital. You can search them right now. They're no longer, no, they're missing. They're gone. And I started with like $250. Put it in. Didn't realize that binary option was a gamble, because I didn't have anybody to tell me, like I'm telling you right now, that binary options is a gamble. So I took that road, and I was putting 250, 250, 250, and I just kept losing money. I would make money, don't get me wrong. I would be up like $430, feeling good. But what I realized, I was always at the computer screen. I was always trying to chase the money. And you guys will get where I'm going with this story right here. I was always trying to chase the money. Start from 250, go up to like 430, come back down to like 200, but always playing the circle game. And I did that for a couple years, and not realizing that me depositing 250 over time, it ended up being like thousands of dollars. So for like 4 or 5 years, I was doing that, not realizing, because I thought binary option was the way. I seen people online, you know, I've won trades myself, you know, 1 minute trades, 2 minute trades. And I thought I just had to get a hold of it. Just, you know, maybe my gambling skills weren't, I didn't realize at the time, but maybe my gambling skills weren't on point. But as time went on, when I started to see that the same race was just going over and over and over, I had to sit back and say to myself, like, man, I'm losing all of this money, right? I'm losing all of this money. And this is probably like my 4th or 5th year going into my 6th year, and I'm just like, hold on, I gotta take a breather, man. So I sat back and I started to just think. I didn't go to, no books, no different strategy. I didn't switch nothing up. A lot of people would tend to do that. They think that when something doesn't work, they just try to revise it. But I sat back and I said, man, let me think. And when I thought, man, I said to myself, man, if this market, this trading market, when I started to realize binary option wasn't the way to go, it led me into Forex, trading currencies, euro, dollar, and all of that. And I said to myself, man, this has to work because it's still here. I see banks are trading and big institutions. There's times I read about, you read about certain things in the market and you're like, man, how come it's not working for me? How come it's not working for me? Well, that's what I asked myself. I almost quit a couple times, like 3 or 4 times. I almost quit because I just thought it wasn't for me. But I don't know. I just don't give up. If I want to know something, I'm going to try to figure it out, to the end. So I did that. And then I got into Forex, like I was saying, and I realized, okay, if banks are in this thing, how does a bank approach the market? And I had to figure that out. I had to say, okay, I need to see how they approach it, because if I could figure out how they approach it, then I can have a good idea. So as I'm going through this whole scenario and this whole story, you should kind of find how to find success, like the title of this video. So as I'm going through, I'm like, man, how does banks approach? I'm on Google, everything, just, doing the normal. How do banks do this? How do banks do that? And I would find a few little sources here and there, but it's just that something wasn't clicking. Something wasn't clicking. So when I got into this term fundamentals, that's when I would say the road got a little bit clearer. I started to realize that CPI, PPI, GDP, interest rates, especially interest rates, they're very important to a value of the currency. Whether this data looks good or not, that's going to bring the value up or the value down on the currency. So once I realized that, I started to say, oh, okay. When I started in the beginning, I did take that technical approach first. I forgot to mention that. When I moved over from gambling on binary options, because those of you know, binary options, right? It's literally like a gambling screen. Like, that's all I could say. You'll see, like, for instance, you can't tell me you haven't experienced this, where you'll see you're winning, and then you have like 45 seconds left, it's coming down, here's your entry, and then right there, bam, it takes you out. 2 seconds left, boom. And it either goes red or it goes green. You know what I'm saying? So I just had a lot of emotions going up and down doing binary options. So when I got into Forex, I did see the technical approach. I did even show on my Instagram before it got erased. I don't even have the book with me right now, but if I had the book, I would show you. It was the Dummy's Guide, something to Technical Analysis. When I found that book, I thought that was I thought that was it too. I said, oh man, I got some information out of this book, not realizing I'm buying the book. Now, how could it really help me if I'm buying the book? Because if it really, I don't know, unless he just really wants to sell it. But back to the story. So I got into the book. I started to read about RSI, MACDs, moving average crossover. When they cross over, that's a good signal to buy. I said, okay, now I'm on to something. Now I'm on to something here. Didn't realize I was only setting myself up for more demise in the markets, because when I would approach the market from that technical approach, guess what? That same resistance, support, look left, I was still losing money. And the thing is this, I'm losing money, but I'm reading the information out the book and I'm applying it from the book, and I'm just like, hold on, I'm taking information from the book, I'm putting it into the markets. And then I realized, oh, the book is full of technical indicators, and technical indicators are all lagging. So when I said to myself, okay, I open a platform, it's giving me all of these indicators, but majority of them are lagging. So what is it displaying? It's displaying fundamental data. Because without fundamental data, that indicator or those candles, they can't collect information to show you whether down or up. So think about what I'm saying, guys. So I didn't start to find success in the market until I changed my outlook and my thinking about how I view a currency. What's the value of that currency through interest rates? What's the value of that currency through inflation? The unemployment rate, the consumer confidence of that company, of that country, because if people are not spending money, right? If they're not spending that money, then guess what? The economy starts to slow down. So we gotta think of all of those factors. GDP, what are the factors that run GDP? What are the components that run GDP? You know, all those little things that tells us the value of a currency. So once I started to change my aspect and say, oh, okay, I see, I have to look at things from a fundamental view first to say, okay, this economy is doing this versus this economy. Guess what? Then I can start to look at a technical chart and say, okay, I think the price is high versus this currency, and I think the value of this will come down because consumer confidence, inflation, GDP, all those little components told me so. So that's why I'm making this video, to give you guys some insight to help you understand. To find success in the market, you have to build a fundamental case in the market, guys. You got to build, almost like what is the foundation first. You know what I'm saying? And what really took me to the top, and you guys hear me mention this all the time, what really took me to the top was when I learned the concept of volatility. That right there, going into my later years, after my 5th, 6th year, that's when everything started to mesh, guys. And volatility is that game changer, guys. We know, listen, a lot of retail traders will sit here and say, yeah, prices were volatile, it moved today. But do you really understand volatility? Do you realize that volatility determines an environment? So right now, if I look at the VIX on my other screen, guess what? Volatility is extremely low, so the risk is on. So if you see somewhere on Bloomberg, I saw it about 30 minutes ago, S&P hit new highs. If you understand the lingo, I'm telling you, you know why it hit new highs. Because the risk is on. We all hear about this risk on, risk off environment. Well, guess what? Those are environments that we need to understand. Because within those environments, we know how to position ourselves. You see what I'm saying? When volatility is low, we can almost rest assured that most of that money flow is going to go into what? It's on the tip of my tongue. Most of that money is going to go into, I can't even think. Currencies like Mexico, ZAR, Turkish lira. All of those currencies, those not the major currencies. I can't remember the name right now, but it'll come to me later. All of those currencies are going to experience some movement in those currencies. Why? Because of interest rates. If you look at pound ZAR right now, I put up a post on my page, on my Twitter page. Why get excited about 50 pips? These traders, these day traders, they get excited about 30 to 50 pips. Pound ZAR, 1,000 pips plus, and collecting interest between the spread, because the ZAR has higher interest rates than the UK. So once we understand the risk on and the risk off environment, that is when we know how to approach the market. Risk on, that means big institutions are more willing to put their money in. When the risk is off, guess what? Day trading environment. Prices move. This is when we see a lot of happy day traders, a lot of scalpers in the market because of volatility. So to answer that question through this whole explanation, it's because I changed my mindset on how I look at the markets through fundamentals and the power of volatility. And knowing that when volatility gives us a certain environment, we know how to approach the market. That's so crucial. I'm not out here just saying, today's a new day and I'm going to look at a red folder on forexfactory.com and I'm going to take this news event at 8:45 and I'm gonna look left. I drew support and I drew some resistance and I'm expecting price to hit. No, that's not how it works. A lot of people will say, oh, you know, don't risk more than 1 to 2% of your account per trade. I don't even think most of you understand what you're even saying, because I don't even tell people that, oh, don't risk 2. What do you mean? What do you mean? The way I'm approaching the market, guys, is if I have a $10,000 account, I'm going to risk 30% of that account. So that's $3,000, and I'm putting $3,000 into the market, spreading it out by interest spreads, right? Spreading it out by interest spreads and having multiple positions give me a return daily. What is this crap talking about? Oh, 1% and, you know, make sure you have an entry, your stop loss, and a TP and set. Man, you guys are giving people the runaround. And until you change your mindset of what I told you, everyone is going to be on the same narrative. And the same narrative is a technical approach. You know, I'm not going to, you know, sometimes it may look like I'm downplaying technicals, but come on, guys. You got to realize where I'm coming from. I've been doing this too long to sit here and believe that technicals is going to get me to the top, when I found a better approach through fundamentals and volatility. And then we use technicals at the end for pricing and seeing where we're going to get in on the market. But why should you wake up, completely disregard fundamentals, don't even know what volatility is, and think you're trading in the market? There's a lot of people that's still probably doing day trading strategies right now when volatility is low. And because volatility is low, retail traders are going back and forth. Buy, sell, buy, sell, buy, sell. On majors. So you're not even looking at currency spread pairs. You see what I'm saying? So change the way you think by wanting to open your mind to fundamentals and volatility, guys, because I can almost guarantee you. I've had members in my private group, guys. I had a guy, his name is Jason, in the group. If if he watched this video, you know who I'm talking about, Jason. He told me, look, he said I was doing about 8 to 15% a month. 8 to 15%. Not bad. I'm not going to say that's bad. That's pretty decent. That can get you steady, you know. But when you want to increase things up a little bit, once he understood the power of fundamentals and volatility and put all of these pieces together, he came back to me later on, I think he had an account connected to my FX book, where you can look at the live stats or whatever the case is. Now, he was using, I believe, an unregulated broker, but I'm not going to knock a person for using that. I tell you guys about unregulated brokers and how they're not safe, but if you got to do what you got to do, you got to do what you got to do. But the point is, here's the point. He went from 8 to 15% to what? He then showed me, man, Kevin, you're not going to believe this. Showed me, I saw his link to his MyFX book. He was up 900%. So his broker was like, whoa, something's going on, because he understood the power of fundamentals and volatility. So it kept him in positions. He's not looking for positions 35 times a day. You know, I did an interview with Trading Nut. And he asked me, well, how many positions do you hold a year? I said, man, sometimes about 50 positions. And people bash me left and right and says, well, how is that possible? Blah, blah, blah. Guys, if you're holding positions for 3 or 4 months at a time, 50 positions, if you hear someone say, I take 50 trades a day, stay away. Opposed to someone tell you I could take up to 50 trades per year. Because what I'm doing is holding most of my positions. Volatility is not up all the time for me to day trade and be a scalper like the rest of these guys. So understand what I'm telling you guys. And, you know, I hope you found success in this video. And I do these videos because I got to drop my 2 cents first. But once again, like I told you, I'm going to start going live. And we're going to do recaps on these videos. And I want to, you know, see what everybody else thinks. What do you think about what I'm saying? For now, drop them in the comments. And until next time, I'll have another video for you guys. And I'm out later. Jay Athens.